Governor of the Bank of Ghana, Dr. Johnson Isiama, has dismissed speculations that the central bank is heavily intervening in the forex market to stabilize the local currency. The cedi, which has shown remarkable stability since December 2024, has even recorded slight appreciation against the US dollar in recent days. Speaking on the business edition of PM Express with George Wiafi, Dr. Isiama credited the currency's resilience to strong foreign exchange inflows and ongoing reforms in the forex market.
So the stability you are seeing now is not because we are intervening in the market. It's not because we are selling reserves for stability. No. Remember, our reserves program is actually going up, by the day. We are building more and more reserves. All that we are doing is strengthening, the surge in inflows. A number of foreign exchange market reforms are being implemented. It is the combination of all these factors that you are seeing. And so long as we hold that anchor, we'll continue to see stability. And I made the point earlier that when we say stability, it doesn't mean the cedi has to be fixed. It doesn't mean that the cedi has to over-appreciate, because that in itself is not good for our exports. So in real terms, we are observing the trends. We want to make sure that the cedi is not misaligned in real terms. It stays within some kind of band, a sort of range that is appropriate, a sort of range that is consistent with macroeconomic stability. So that is what we'll be looking at. But all I can tell you at this point is the days of excessive volatility of the cedi is certainly coming to an end.
Well, the Joy Research Desk has been looking at the performance of the cedi in recent weeks, and this is what we have on your screen. And I've got the man with the money, Winston Taki, to come and explain to us. But Winston, let me understand truly that the cedi is performing well. Walk us through.
Interesting enough, you don't appreciate the whole outlook of the cedi if you're not in business. Most businesses rely on the stability of the cedi before they transact or even buy products. Some buy them in wholesale, so that they can hold them towards some of this happening in the market. So for quite some time now, the cedi in the month of January to April has been a bit stable. We've seen some cases in 2024 where it was around 7.70% in terms of depreciation. By the first 3 months, the first quarter of 2025, we've seen marginal stability there, depreciating by 5.30%. And this is a very interesting development. Many have attributed to the strong performance of the dollar, which has given it respite against the cedi. And also the central bank has also injected an amount of $200 million in the first quarter to as some kind of market intervention we've experienced there. Already, we've seen its impact being felt in the petroleum price, and that was released just yesterday. We've seen most petroleum marketing selling companies bringing their prices down. So that is what happens when the cedi is gaining a bit of stability. And some will say, how do I feel it? You are feeling it at the pumps from the first place. But this has been the trend in the last, from 2024, November to April 1st, that was possibly yesterday. So as of 2024, it was around 16 cedis, 42 pesos. That was when someone asked me, should I hold or should I sell?
Yeah.
So the volatility or the unpredictability of the market can change anytime. It fell down as in January 2025.
The person won't be happy with you at this point at all.
Yes, nobody like that. So we saw the main stability between December 2024 to January, a bit stability, and that was when the election period was there. People were holding on to the cedi. Many also were buying the dollars, not sure how the cedi will perform. But we've seen the respite going up a bit marginally in the first quarter. Now it's around 14 cedis, 15 pesos. The central bank governor said this is basically due to reforms in the forex market and some of the new policies they intend to institute based on this new strategy going forward. But right now, the cedi appreciated by 8.23% to the dollar as at April 17th.
You're amazing. Thank you so much for bringing clarity. Now, joining me now via Zoom is Professor of Finance and Economics, Professor Godfred Bokwin. Thank you for joining us this afternoon. I am with the money, and I want just simple economics because I like you to speak very simple economics to me. Shall I keep my dollar because the economy is doing good or the cedi is appreciating? What are the factors really contributing to what we have just seen?
Yes, good afternoon, and good afternoon to our cherished listeners. Yes, the relative stability is predictable, it's understandable, again, consistent with what the gentleman just presented, if you look at it from December last year, of course, there was considerable injection of FX in the market in terms of BoG selling dollars on its own accounts and all of that. Yes, great. But again, look at it, the decisive nature of the 2024 election and also the promise of the government to tackle corruption, economic restoration, and all of that. In fact, actually, that goodwill seems to have been very strong and well internalized, so it's playing a role. Then again, look at the 2025 budget with the strongest expenditure-based fiscal consolidation, which shrunk expenditure essentially in 2025 and all of that. Then again, you also see government signal that they were not going to borrow as they had been in the time past and all of that. All of this sends a signal to the market that there could be stability, at least for this year. Look at it also that if you look at the 2025 budget, and here we need to be very careful, and the reason why the intervention in the market should not increase so as to cause false confidence that we have arrived. Why?
Okay.
Because the 2025 budget is not the full reflection of the government promise and the future because of the huge expenditure cuts. So government is operating practically just above 60% as we speak. Okay, so you look at the expenditure cuts, you see so many things that they are doing. Of course, we have passed staff level agreement. There are about 3 or 4 prior actions that we have to meet before the staff level agreement goes to the board. So if you look at the outlook from now to, let's say, September to the end of the year, it doesn't give a cause for concern, which will trigger volatility in the market. But hold on. Let's look at it. The government cannot continue to operate at this level of expenditure-based fiscal consolidation from next year. So from next year, government will begin to roll out its full program, and the promises will begin to find its expression in the budget, and then there will be uptake in terms of activities, and then port traffic will also increase and all of that. Then we resume servicing of our debt towards 2026, 2027, and all that. So when the economy is operating in full swing,
then we can have a conversation.
Then you can say that we have arrived.
Prof, thank you so much. Thank you so much for bringing some explanation to this so that you're not too excited or you're not too sad. Hang in there. But you're watching.